All right. Good morning and welcome back to today's Tokyo Sydney overlap. It is 7 p.m. Eastern now as we move into the first session of the day, and let's get straight away started with Bitcoin. Actually, with Solana, we got stopped out right after the session, New York session yesterday, and Bitcoin has potentially tested the 91 handle, and I also think that is kind of readjusting the wave counts or the wave structure. So let me bring up the triangle structure that we have been discussing lately. Oh, all right. So here's the triangle structure which we've been proposing lately, and we don't yet think that the triangle is complete, but I think that was wave E, which really got down a bit more than expected, and it was. Let me bring up the chart where we've labeled. I think it was Coinbase. All right. So the labeling goes like this: wave four, the triangle structure which we've been proposing. There was a wave E, which we kind of imagined or labeled around the 91,000 mark, that is now terminating around the 91,600 mark. All right, and if this is labeled correctly, then we might be looking to have one more high before the bears are back in control. All right, that is what we need to watch out for. That is just around wave C. Normally, the triangles would not break below the C waves, but yeah, those are the labelings. It's actually not breaking, it is not broken actually below the wave C, but it is tested. Ideally, it would not go below wave C, but sometimes it does go, that's fine. Technically, it should not go below 89. That's a rule, all right? So, uh, for those who had kept the stop loss around the 91, maybe they're still active. I would ideally suggest that place your stop loss around the 89 mark, 89,000, because technically, if wave A of the triangle goes bust, then the triangle is no more valid. That the triangle setup is no more valid. All right, so kindly adjust your stop loss to 89,000 uh, from 91 and stay put on the long side, please. That drop is three waves A, B, C. So the structure still remains valid of a triangle where Bitcoin has, after wave 3 minute termination, it is called wave A, three waves wave B, another three waves wave C. That three wave was a sharp wave D, and wave E is now completing possibly. All right. Now, if the triangle has been a bearish one, then we got to look into the possibilities of. I mean, first of all, it would break 89 levels, and then we might have to think about possibilities of turning short on rallies thereafter. All right. So this is the story for Bitcoin. We still remain long with a stop around the 89,000 mark, but a push above 96 will now be required for the bears to to be eliminated and bulls to be back in control. So 96,000, just keep an eye. We'll be watching it closely as well. Around the 96K, that is the first resistance, which should be now taken out for bulls to come back in control strongly. All right. Okay. Since we've touched base with the bitcoins, okay, Solana, we are going to remain on the sidelines for a while before we see an impulse wave higher, because there is, I've got to readjust this count actually. We cannot place this at wave 4 no more. That should be eliminated. Let me delete that. And okay, we can still take this as 5 wave decline, but let me check with the Fibonacci extensions as well. There is some kind of a major churning going on, it looks like. And again, if we go by the warning that we had been placing back a couple of weeks back, that could be turning out to be true actually. So another couple of sessions and we should be good to find out what exactly is going on in the coins, and maybe it might not be a bad idea to turn bearish on subsequent rallies. All right. So that's the story in the coins. We will go back to the currencies now, and then metal, and finally the indices. Okay, Euro USD. We'll first check the daily charts. The setup in the, I mean, look at that sideways action going on. Did we not? I mean, the euro, dollar index, and pound have been bang on target since the 13th of Jan. Last week we were discussing about a potential high around the 500 mark, and then possible reversal uh, for the next week, that is this current week, and we are now entering close to Tuesday. Still, the price action is not expected to have bottomed out. It could drop lower until the 320 mark and then begin wave 3 higher. That could be the trajectory. Right now, this entire structure, of course, the larger degree trend is up with an impulse move higher, followed by a corrective wave lower, ABC, and that entire structure is is not yet confirmed, but it could still unfold as a running flat or a WXY. We can explore the pattern more closely on the hourly chart and then the trade recommendations. All right, sir. So we've got the first impulse, 1, 2, 3, 4, and 5, and then an ABC. We go with the high level probability of wave 1 and wave 2 in place, and the third wave is underway. Okay, that's the high probability. The only question is, what if this structure is an ABC as well? It is quite possible. And then we have another ABC, lower. Just need to change it to minute. And you got an ABC lower, and then an ABC higher, and possible another ABC lower. So that brings us to a 3 down followed by a 3 up, and yet another 3 down structure, which kind of settles around the 350 or maybe even lower than that, and giving us a good chance of, first of all, buying lower. That would be a good chance, 350. Second, wave 2 will be then shifted to 350 as a combination, not where we are proposing right now. So we keep our options absolutely open. But the only thing which is more confirmed, and we are absolutely confident about, is the trend is up. The larger degree trend is up. One lower degree trend is also up. And what we are now seeing is a potential wave 2 correction, which might be, uh, I don't think it's over yet, which might be uh, taking a few more sessions to settle around the 350 mark. So mark those levels. For those who are now trading point of view, let's discuss. The positional traders might have added further longs around 470 yesterday. That's fine. Uh, those who are wanting to take fresh positions, once again advisable to only initiate small lots over here, and the remaining keep some space for adding around the 350 when prices drop there. Today is we are entering Tuesday, so by Thursday or Friday, I think we should be good to settle around the 300 350 mark. Stop loss ideally goes around 1.02, and what we've done is place a stop loss at 1.0150. The potential targets not changing at all, 750 and 1100. All right, 750 and 1100 up there. All right. Okay, then the dollar index now. Tell you what, the larger degree trend in the dollar index has turned lower, and it has confirmed that trend was turned lower in July 2023. And after a couple of years, it has now completed that the corrective wave is also complete, and the price action is turned towards the larger degree trend lower. Now, if we look at the structure here, it's actually getting more clear than what we're seeing in euro, because I can see a clear 5-3, and the third wave is extending, and it's going to be a serious business if it's really an extension. Tell you what, uh, that's 5 wave lower is the minute degree wave 1, followed by 3 wave higher is minute degree wave 2, and then we can see 1, 2, 3, 4, and possible fifth wave. Now, if that is correct, then what we see now is 1, 2, 3, 4, and 5 is just the first wave of the third wave. This cannot be wave 3 actually. Wave 3 would be going much, much, much lower. Either this is a first wave of 3. Remember, third wave will unfold into 5 waves again. So either this is the first wave within the within the third wave, or it's just a corrective ABC, and then we are going to see another ABC higher. But I really think that it's the first wave of within the wave 3, and if it is done correctly, then at least we'll have a move up to 107.48, previous wave 4 of 1 lesser degree. And not only 1 was 748, it's actually projected to go up to 108 as well for the second wave. See, if you just, because it's about visualizing the wave structure. If that drop is wave 1 of 3, we could still have the second wave 2 of 3, either 10750 or maybe 10790, that's 108, before the third wave could actually resume lower again. Right, so that's the structure which we are actually proposing in the dollar index. And if it's not the second wave, then it would be a combination WXY, which could be unfolding in the dollar index. Broadly speaking, the large degree trend remains lower. It's actually just beginning to cut loose on the south side. I mean, there's only one more opportunity which could be provided by the market right up there, and then the third wave would be the most fierce one, going straight towards 100, possibly even lower, before it can conclude itself. You see that 100 mark already. That would be wave 3. All right. I think we can now eliminate this Fibonacci extension to just avoid confusion. The primary Fibonacci extensions are here. That is sub waves, so we can eliminate that extension. All right. One more rally and then lower. So trading point of view, positional traders remain short, fresh. Those who are wanting to take fresh positions, you might want to initiate partial right now, but keep some space around 100 points higher, around 10750, 108 kind of a range. That would be an ideal place to re-enter on the short side or add positions further. The stop loss remains at 10985 going forward. All right, sir. GBP USD now. Okay, let's have a quick look at the daily chart. I've not labeled it. Let's label it now. Okay, here's all the smaller, lower degrees. So let's change the visibility to dailies. Let's remove from the days. All right. Larger degree trend has already turned higher. That's a confirmation. We received in July 2023 as euro, and the dollar index. We don't have to see this in the hourly and 15 minutes, so let's remove that. That would be a minor degree, so let's change it to a minor. And then what we see on the right hand side is an expanded flat or a WXY. For simplicity, I'm going to just print an ABC. It actually is a 333 structure. 333, ideally it would be a WXY. You know what, let's change it to WXY. And the degree is going to be minor. Okay, so the larger degree trend has turned up. It's well under. I need to change. I'm looking at the visibility. Hourly is not required. We don't like to see that on the hourly, and then we put the Fibonacci ratios. So the 38.2%, unlike the euro, which actually slipped all the way towards the 61.8%, but it was not an expanded flat or a running flat kind of structure. It's a WXY and also a running flat actually. Uh, so let's keep this label now with the larger degree trend having turned on the upside. A reconfirmation by WXY, which is settled around the 38.2%, and without any doubt, what we see on the right hand side, all the price action is an impulse. The pound has confirmed and reconfirmed again that what it's doing is an impulse higher, that is at the minute degree 5 waves, followed by a corrective wave lower, ABC. Once again, it is wave 1 and wave 2, and the third wave is progressing higher. Now, if the third wave is extending, sorry, we still have room to go. We still have 2800 levels to tackle. So I won't be surprised if the RSI being settling around the 40 mark. There wouldn't be much surprise if it stages a rally from here itself, going towards the 28 mark before a corrective decline. But then we also keep our options open for a much deeper correction now, back towards the 2450s, 2500 levels, and then the resumption of a rally towards, towards 28 and 1.03, 1.0300. Those are the targets, and they're well within the reach actually. No surprise at all if when 1.2800 was almost there, it reached 1.27 already last week. Trading point of view, positional traders, please continue holding their longs, and those who are initiating fresh or want to initiate fresh, please break it up into at least 2 or 3 pieces, different lots. Maybe one here, another one around 2500, another one around 2450. Technically, the stop loss remains or should be 1.2250. All right. Okay, let's pick up gold. Gold is actually it's either one leg away. Last time what we discussed was I mean we are not changing anything from what we discussed in the New York session. So we are proposing a potential minor wave for could be complete around the 2537, and the minor wave 5 is progressing with wave 1, 2 and potential wave 3 at a minute degree complete or near to completion. So if the minute wave 3 is complete, then we would find out, we would see a zigzag correction lower back towards the 2813. Now we are ruling out possibilities of much deeper correction around the 2500s with minor wave already underway. But you look at the stagnation here, right across the 2950 mark, it's quite possible that there might be one more shallow high before the reversal occurs. All right, so that's the larger degree structure. We are looking at minute wave for corrective decline lower. The RSI also supporting with the bearish divergence view. On the lower degrees, what we need to now see is a break below 29.19. We need to shift it a bit on the right hand side and a bit lower. All right. So if that is correctly done, then we might have lower degree waves, ones and twos. What we are really interested to see is a break below the 29.19 structure. Until that happens, there's always a chance of another high. So either diagonal completed around 29.55 highs yesterday, 56 highs actually, or it is wanting to complete around the 29.60s or something. Aggressive traders might be holding their position right now. There's nothing wrong in it, but conservative traders need to see some more price action confirmation before it actually would allow them to go short. It's actually it's not the price action confirmation. It's not really recommended to go short for conservative traders, because if minute wave 3 which we are proposing is complete, and if it is not complete, then somewhere the prices would stall somewhere around the 29,000 mark, 2900 mark, the 61.8% of that rally, and begin higher from here as well. So conservative traders, the recommendation is to remain flat, please. There's no need to take aggressive shots, and wait for further confirmation. I'm watching for price action to at least break below 2919 before we can confirm or conclude. Actually, below 2875 gives more confidence. That is 2875 here. That gives more confidence of price action confirmation. So for conservative traders, what we recommend is allow price action to drop towards that 2875, which could be as a 5 wave or a 3 wave move. Only time will tell that. Then a corrective wave, and we go short right there. All right. So a safe side in gold would be to remain on the sidelines for now and allow more price action confirmation before committing on the short side. On the indices front, we would touch base more details in the London session or the New York. I tell you what, this guy now means serious business on the south side. It's a wave 4 triangle going on right now. We might be seeing one more low after that. All right. But it's something serious going to happen, which is being seen on the charts now, which we have waited for several weeks, is now coming up uh, in reality. It's just beginning to cut loose. So we've got much lower levels to explore on the south side, please. All right, so let's bring this current session to a pause now. We're short in indices, US 30, that is Dow Jones, and Nasdaq as well. We would initiate SPX 500 at least in either London session today or the New York session today. All right. So with that note, let's bring the current one to a pause. And as always, thank you for being here. We'll be watching Bitcoin closely. Solana, we remain flat. Gold aggressive shorts are in place with stop around 2959.5. Euro on the long side, pound on the long side, dollar index on the short side, and Nasdaq on the short side as well, along with Dow Jones. Those are the stories briefly for the session. We'll be now back during the London times, and until then, good luck to your trades and take care and God bless. Goodbye.